Hey guys, Lincoln here from boacademy.org. Today I want to talk to you about FOMO, the fear of missing out, and why you need to manage your FOMO and avoid buying the hype. A few days ago, we saw the news of everyone chasing the hype of Kodak and how they got a loan from the White House to build a pharmaceutical production facility. On that news, a whole bunch of investors decided that Kodak was all of a sudden this great pharmaceutical company and that it was all of a sudden worth $60 per share, when a few days earlier it was worth $2 per share. This is called hype, and it's even worse when people are chasing the hype because of their fear of missing out on such a great deal, right? Everyone saw that Kodak was all of a sudden rising from $2 per share just a couple days earlier to $60 per share, 2,000, 3,000% above where it was a few days earlier. That is the definition of chasing the hype, and that is what happens when people don't manage their fear of missing out to avoid losing their money on bad investments. Kodak might be a great company with a long-lasting brand, but they haven't given us any reason to believe that their stock is worth $60 per share. That is just hype, and I want to show you what happens when you invest in hype. So in one day, Kodak went from $20 per share to $60 per share, and in that same day it went down to $30 per share. From there, it kept falling, right? Because Kodak isn't worth $60 per share, right? So now it's trading around $14 per share. That's how these things work. Some person sees that there might be great news coming out on a company and that people are going to want to buy the stock of that company. So they buy the stock early on, and then when the stock sees the hype, when everyone comes in and wants to buy, they keep on pushing the price up, and eventually it reaches a peak. We've seen it over and over again that when it reaches that peak on hype alone, on the fear of missing out alone, it quickly falls back down to a reasonable price. So the people who invest on the way up based solely on hype and their fear of missing out quickly see the value of their stocks plummet when the hype dies off. And then they start to think, what happened? This company was worth so much just a few days ago. It was the big deal of the time, but now I've lost half my money, 80% of my money. Right? Because you bought on the way up just on hype. You didn't actually understand what was going on with the company. You didn't believe in their future. You just saw an opportunity to get rich quick because you thought that you could get in earlier than other people who were going to buy the hype as well. So you thought you could get in at $40 on Kodak and that it would go up to $80 per share, just because of this news that they were going to become this pharmaceutical production company. So we've seen it happen, right? People have lost a lot of money on this stock because they invested solely on hype and the fear of missing out. You don't want to do that. It can really ruin your financial situation. It can put you in a big hole and turn you off from investing, right? That's not investing, that's speculating. You want to be an investor. Investors know what they invest in. They understand what they invest in. They believe in what they invest in. And they hold for the long term. That's the bull mentality, right? That's what we practice on this channel. We're not here to be day traders. We're not here to try to get rich quick. You're not going to get rich overnight as an investor. It just isn't going to happen for most of us, right? Of course there's outliers. Of course there will be some guy on Twitter or Facebook who's saying, I made $1 million in one day using these 10 strategies and I can teach you too. Don't listen to him. He's trying to sell you a bridge. If he could do this over and over again, he would. He wouldn't be trying to sell you some course teaching you how to make $1 million overnight investing in stocks. It doesn't happen. That's not genuine. That's a con artist. Don't buy those courses. Don't believe in people who tell you that you can become rich overnight. As an investor, you have to have conviction in what you invest in. You have to believe in it, and you have to plan to hold on to your investments for the long term. There's so many benefits to that, right? Of course, the government's going to give you tax breaks. That's great. But the other benefit is that you get to benefit from the appreciation of your assets over the long term. And as the value of your assets grow, as the value of your stocks grow, your net worth increases in a sustainable manner, right? It's not going to spike up in one day and then come back down and crush your financial situation. It's going to be growth that is sustainable and that will take you into retirement and maintain your lifestyle, the lifestyle that you want to live. As you relax, knowing that you've made sound investments based on fundamentals in companies that you understand, that you know, that you believe in, right? That is how you build wealth that lasts. Trying to chase the hype, trying to buy what everyone else is buying because they're buying it isn't the right strategy. You're going to lose more times than you're going to win by doing just that. You have to understand what you're investing in, right? We saw this with Bitcoin back in 2017. Between October and December of 2017, we saw Bitcoin go from $3,500 up above $1,900 per share for this cryptocurrency that those people, those investors, most likely didn't understand, right? They believed that if they got in at $3,500, then they could make a quick buck because everyone also was going to buy, and then they could sell their share of Bitcoins and make a quick fortune. But you cannot time the market, right? You might get lucky once in a while, but the market is not something to time. It's something to invest in and hold for the long term. Time in the market is more important than timing the market, right? So when that Bitcoin rose 440% in 2 months, in 3 months, however long that was, very short time, that did not last. Bitcoin went up to 19,000, and within a year, it was back down below where it started a year prior at $3,000 per share. That's what happens when people invest based on hype and FOMO. That's speculating, not investing. So lots of people lost a lot of money trying to speculate on Bitcoin continuing to rise and rise and rise and rise, thinking that what goes up does not come down. You cannot fight the laws of our nature. What goes up must come back down, right? Especially if it goes up at an astronomical rate. So Bitcoin came crashing right back down. We saw the same thing with Bitcoin Cash in the same time period. So Bitcoin now trades around $11,000, which is great. It's up from where it was in 2018, but it's still much lower than the $19,000 peak that it was at based on its hype in 2017. So don't try to invest in hype. Don't try to time the market. Invest in companies that you know, that you understand, that you believe in, and that you plan to hold for the long term. And that is how you give yourself the best chance of succeeding in the stock market, right? That's what we practice here, the bull mentality. Please don't fall for those people online, those con artists who are trying to sell you their course on the 10 tricks that they used to make $1 million in 10 days or to retire by the time that they were 18 or 20 or 30 or 40. Don't buy their course. They're trying to take advantage of your innate desire to improve your situation. They know that you're in a undesirable situation, so they try to sell you a quick bridge to a better situation. That bridge is built on lies and is going to crumble the moment that you get on it, right? What they're selling you is not sustainable. And the next hype train is going to come in the stock market. It's going to be a great stock that everyone thinks is the next rocket ship that's going to go up 1,000% in the next day, in the next week, month. If it's based solely on hype, let the hype die down and then analyze what is happening. Wait for that stock to come back down to earth, right? Because what goes up is going to come back down. We've seen it time and time again. And once it comes down, you can have a better idea of what people are really willing to pay for this company's stock. If the price rises very quickly, that means that people are just trying to get in before everyone else gets in, because they believe that it's going to continue to rise on hype. And they know that, so they're hoping that you will come in as well and buy above what they bought at. and that you will push the price of the stock up, and that the next guy will come in and the next fool will come in, right? The bigger fool theory, that there is always a bigger fool than you that's going to be willing to pay more than you paid and allow you to exit at a much higher price than you paid. Don't fall for it. Don't be the bigger fool, especially not on hype, and definitely not because you fear missing out on a great opportunity. If it's a great opportunity, it will be there tomorrow, right? Once it comes back down a little bit, then you can analyze it better and get in at a reasonable price and then hold for the long term. And if it is a great company, over the next 5, 10, 20 years, it will continue to go up and you will still benefit from appreciation of the value of that asset, right? Only if it's a great company. And if it's not, then you didn't miss out on anything, right? If it goes crashing back down, then you can see that it wasn't worth what everyone else was paying for it, because it was just hype, it was just FOMO. They didn't understand what they were investing in because they don't practice the bull mentality. The bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term. I need you guys to understand that, and I need you to practice that, because that is how you build wealth sustainably in this country. Of course, I'm no financial advisor. This is not financial advice. I'm just a guy who is a software engineer who uses reason and logic to analyze situations and opportunities so that I don't get burnt. So thank you for watching this video. I hope I've helped you understand how these hype and FOMO stocks work, and I hope that you've enjoyed this video. If you did enjoy this video, please remember to like this video below, subscribe to the channel, and comment what you've learned and what you would like to learn in the future so that you can help me help you learn how to build wealth sustainably. Thanks again and have a great day.